Before I get into the numbers, I would like to give you a color in terms of the performance. What is good about is the footprint. We are very happy to see a dollar term growth of 3.7%, the best in last 6 quarters. We are very happy to see all markets growing, and market like Europe trying to do better continuously for the fourth sequential quarter. If you look at vertical perspective, all verticals have grown, and some of the verticals that we have been focusing on have done exceptionally well, like life sciences, like travel, like utilities, energy. Many of these verticals have done exceptionally well, and most of this growth is driven by either a cloud adoption for business agility purposes, or like in telecom, front office transformation of systems using digital. And we are also extremely happy on the people front. The retention numbers are one of the best we have seen. At 12.5% attrition on the IT services segment, probably it's our best metric in 10, 12 quarters from a people perspective. So the overall footprint is very good, and numbers wise, the revenues are 3% on rupee terms and 3.7% in terms of dollar terms, and volume growth of 3.4%. 4.362 million in dollar terms and 29,305 crores in rupee terms. I'm very happy with the margin. With all the business metrics and people metrics kicking in, the margin improvement, rather, on a quarter in which we have significant headwinds, both in terms of wage hikes and also the currency headwind. In spite of both, we have been able to deliver a very credible margin at 25.1%. And net profit has come very handsomely at 6,317 crores. The deal wins have been very good. Deal pipeline is very good. And from emerging market perspective, India has done exceptionally well with about 8.5% growth. And these are the opening comments I want to make. And the other comment I want to say is that we have adopted Ind AS, and you have the new set of accounts. And pretty much the IFRS accounts and the Ind AS accounts from a P&L perspective pretty much match. So that should also help reporting. Otherwise, we always get these numbers wrong, whether it is IFRS or Indian GAAP or whatever. So I think hopefully it will continue to be like that. Thank you so much.
We'll start taking questions. First up is Reema Tendulkar from CNBC.
Good evening, gentlemen, and congratulations on a steady quarter, very broad-based growth, and as you said, your core markets have done very well. But my first question is, how should we read the fact that your volume growth as well as your constant currency growth this quarter is lower than what we had in Q1 of FY16, which was anyway lower than Q1 of FY15?
I think the way to look at it is that we have done quite well from a sequential perspective. And you know, it's very important to get the Q1 right from Q4. And from that perspective, even in a sector like BFS, the incremental revenue, dollar revenue incremental in this quarter is higher than the incremental dollars of last quarter. Same thing in North America. So across segments, that has been the case. If you look at a telecom or a life sciences or any other sector. So I think that's the way I would look at it.
Rajesh, on the margin front, 25.1% is better than, what consensus expectations was. First, what was the impact of wage hike on your margins, and how did you offset it? Was it an account of the lower visa cost, compared to prior years? Take us through the margin breakup.
We gave industry-leading wage hikes in the range of about 8 to 12%, as has been announced previously. And as typical, the impact of it on the margins is in the range of about 200 basis points. We lost another 20 bips due to the way the currency moved, and we've been able to bring back about 120 basis points through various operational areas. Prime among it is the business mix. We have seen strong growth in high margin services. Enterprise solutions, consulting is doing well, digital is doing well. We are seeing strong growth coming out of continental Europe on a sequential basis. So the mix of business has been very good. Our employee engagement and HR initiatives are yielding very good results. Compared to Q4, on our gross additions, we have added 3,000 odd people less, or almost 5,000 people less, whereas our net additions is almost equal. So attrition and managing attrition always plays down into the margin side. So I would say a good mix of better business mix, tighter efficiency management, areas like external consultants, those areas have been more efficiently managed, more tightly managed. So overall, just running the business better.
And you're maintaining your margin band of 26 to 28% for the year.
So as you know, we don't give any guidance. We are very happy.
Stated margin.
No, we don't have this thing. So let me put it this way. I'm very happy with our directional progress on the margin front. Very happy with the multiple dimensions that have been brought into play in this quarter. And we remain, focused on delivering profitable growth. And rest of it is where it happens.
Quite non-committed. Chandra, let me come back to BFSI. You point that the incremental revenue addition in BFSI this quarter was more than that you saw even in the prior quarter. But in actual percentage terms, it slowed down compared to Q4, which was more than 3%. Even last year in Q1, BFSI growth was more than 3%. Is there anything that we would worry about? And let me follow it up. If you could just give us an update on the headwinds, which you had given us an update earlier on Latin America, Japan, Diligenta, etc., where they stand now vis-a-vis the last quarter, and any other pockets of worry if you've identified any new ones.
I think from a BFSI perspective, I already mentioned the incremental revenues this quarter is better than last quarter. Yes, it's a fact that the growth rate, if you compare it with last year, Q1, definitely it's lower. I think that is to be expected. It is in the right direction, but considering all the things that are happening in the macro, I think it will play out as we go. But from my perspective, based on anything I've heard from any client, I don't have any negative to report at this point in time, any client-specific negative to report. But having said that, we need to watch how the Brexit plays out, how companies react, financial institutions in particular, how do they react to Brexit, all those things to be watched out. But as of now, I feel the incremental revenues are good and it's moving in the right direction. And so I have nothing specific to caution on that front. With respect to the 3 or 4 troubled areas, which earlier troubled areas, I think Diligenta has delivered as expected, which is flattish to slight growth. And Latin America has been more flattish. And Japan, we continue to have degrowth. And I had said that the Japan will take some time. And so we need to wait it out for some more time for Japan.
And no other sectors?
No other sectors. And in fact, telecom has been very, very good. Energy has been very, very good. Utilities has been very, very good. So these sectors have done extremely well.
Ashwin, ET now.
Good evening, gentlemen. Since you have a substantial exposure to Europe, the markets want to know from a key stakeholder like you, how do you see the post-Brexit environment panning out? Do you see CIOs, CTOs delaying their IT spends in terms of decisions? And also, what kind of uncertainty will it lead to in terms of deal pipelines going ahead?
I think I just mentioned, I'll probably repeat it. As of now, we are watching Brexit. But based on our interactions with key customers, financial sector clients, as well as other sector clients, post June 23rd, we don't have any specific caution to report. having said that, the whole Brexit, how it moves, it's playing out as we speak. Some time ago, we thought that Britain will have a new Prime Minister only in October. Now we have a new Prime Minister. So these things are developing as we speak. And your information or my information is the same. So we need to see what the developments are going to be and what the reactions are going to be from clients. So our strategy would be to stay very close and then take actions as appropriate.
Chandra, I'm tempted to reiterate my question because London is clearly a very important financial hub. And the last time there was a global financial crisis, correct me if I'm wrong, in FY10 we saw your growth dropping to 5%. So the point I'm trying to get at is there a chance of a possible repeat? How anxious are you?
As I said, I mean, there's nothing anxious about it, but as I said, the only way to do this business is to stay close to all developments, to all customers, and then take actions as appropriate. At this point, I have also had the opportunity to be in Europe for about 10 days. So I have tried to gauge and try to get information. And my teams are very closely following up with clients. So I can't tell you that this is the way it's going to happen, that's the way it's going to happen. Because it's yet to happen. The decision has been made. How it is going to play out, how the negotiation is going to happen, when the Article 50 will be invoked. So many things are there. And what does it mean to a regional bank, a UK bank? What does it mean to a global bank? So how the global players will react, how the regional players will react, how the national banks will react, all these three things will vary depending upon what the outcome is going to be. So it's very hard to predict the scenarios. We'll see.
Point taken, Chandra. I'll not force you to crystal gaze any further. An outlook on pricing. Do you expect the pressure to continue on the pricing front?
See, I can only go by the environment and the track record. The environment on pricing pressure or the perceived pricing pressure has always existed. But if you look at, especially last 3-4 years, there's been a constant worry for analysts, constant worry for people. I think we try to run it as disciplined as we should be. And we have been successful in maintaining more or less the same pricing. That is, our growth in volume has been translating into growth in revenues. If you look at FY16, FY15, FY14, and that's the way it has been. There have been quarterly volatilities, but by and large, we have been able to do that. So I think that that trend will continue.
All right.
I hope that with the pickup that we are seeing in digital, pickup we are seeing in consulting,
automation,
yeah. Hopefully we will push for some increase in pricing.
All right. Thank you so much.
Yeah.
Priya from CNBC.
Good evening. I just wanted to understand, when do you expect Diligenta to see an active turnaround?
It is not degrowing. It was flattish, and it started to show some revenues. Now I think from here, I don't expect it to degrow. It will have slow growth from here.
Right. Also, I want to understand on the digital front, what is the order book looking like, and what is the outlook on the whole space in digital?
See, as I said, I think we are seeing a big adoption of digital across the board. If you look at telecom, there is a lot of front office systems transformation. Things like customer journey management, digital marketing, channel integration. So those kind of engagements are very, very pronounced. If you look at manufacturing, if you look at energy sectors, etc., we are seeing a huge adoption of transformation of infrastructure and the corresponding application portfolio into cloud. We're doing some very large cloud engagements, both a combination of private cloud transformation and a public cloud transformation. The other area that we are seeing a lot of traction is analytics coupled with IoT. How is the sensor data getting aggregated, and whether it is in terms of providing supply chain visibility, okay, or in terms of any of the other business outcomes customers want. How do you use data from the field, from sensors, and how do you give real-time visibility in the supply chain, and those kind of engagements. So I think most of this growth in all these sectors is coming because of these kind of engagements. So I feel that this will continue.
Right, I had a question for Ajoy. In terms of attrition, we've seen 12.5%. It's a very good number. But, what's your comfort range? Do you think it can be further brought down?
I'm always hopeful that it will be further brought down, and definitely yes. And yes, we have done pretty well. Many reasons for that. One is the way we have been engaging with the employees has been pretty good, and consistently that's been delivering results. Second is we have been talking about the whole digital training that we have been doing for our people. And last year we reported 120,000, and we have taken that forward, and we have trained many more people on digital. And that is also helping in employees or all our associates to build their own skills, build their own competencies, and be relevant in today's market. So that is one. Third is the compensation and benefits that we provide to our employees. That's also playing out pretty well. So these are primarily the reasons.
Next is Nivrita from Bloomberg TV India.
Yes, sir. Hi. So you'd indicated that you'd start introducing incremental investing this fiscal onwards. I just wanted to get a sense of, is that weighing on your margins? If so, how much? And
What is the question?
you'd indicated that you're going to start investing, picking up the investments from this fiscal onwards last quarter. So
I don't know what is the exact statement we said, but we have been investing significantly in digital, both in terms of talent development and platforms, or whatever is needed for the business for future, that will continue.
Okay.
There is no cut on investments that are required for the future.
Do you see this investment cycle continuing for a long time into this fiscal in spite of the pressure on your margins?
Yeah, I think the investments for the future we will never cut. Okay, I think that's needed. That's part of the business. That's the way you kind of push forward, especially in an industry like us, and at a time like this when the technology is changing pretty rapidly. Absolutely. We will not be stopping investments at all.
I also want to get your outlook on your India business. There's been a lot of volatility. What's your outlook?
So you've done very well now. So why don't you take it and be positive about it? I think the business is good because most of our revenue this quarter in India business, this growth you're seeing has come from corporates. I'm very happy to see that. Okay, because once the corporates start spending into change initiatives in big programs, it will continue, one thing. Second thing is it will also good for the economy. So I'm quite positive with what we have seen, and it's not some one-off here, one-off there. By and large, it's been very incremental from some of the projects and engagements that we have won and executing from corporate sector.
Could I also ask you to share a few more details on your demand outlook in terms of your different verticals and geographies?
Wow, that's a very broad question.
Yeah, where do you see the challenges?
See, I think, as I said, all these verticals that we have delivered growth, we are not seeing any one-off challenge. I mean, whether it's a telecom, whether it's life sciences, energy, or any of these sectors, and whether it's BFSI or retail. So all these sectors, we continue to see a very good, robust pipeline. We just hope that all the change initiatives planned play out, and we should not suddenly start seeing postponement or anything of that kind, and because of the macro. But at this point in time, I think our growth is pretty broad-based, and I hope it will continue to be broad-based.
Joshel from ET.
Margin. I know you haven't given outlook in the past, but the margin stated range was pretty much cut in stone for first TCS for at least the past couple of years. So are you disavowing that range now?
No. I think our intent is to always stay within the 26 to 28. That's the statement we make, and we are not changing that.
So then it's fair to expect that from now the attempts will be to bring back the 25 back to the 26.
No, I think I've given you a statement of intent. how it will be in Q2, how it will be in Q3, all those things, we don't comment specifically. We have always said that our stated intent is to stay within that band.
So but how do you intend to bring the intent into action? Is there...
So we'll see. You waited this quarter, so you wait. So because then there is no point. We have a position of not giving guidance. So if we start getting into being much more specific, then might as well give guidance.
Sir, can I ask you, give me an update on how Ignio has been doing? I know you've been winning incremental pilots in the last quarter. So.
Ignio actually incidentally completed the first year anniversary in June. So it's been a good year. And this quarter has also been good. They announced quite a number of wins, I think, out of which 4 wins are in the Fortune 100, Fortune 200 companies. And this quarter we went live, I think, for the 5 clients we went live and started to see the benefits. So it's doing well, but in terms of revenues it's still small, so we need to allow it to gain.
Varun from Mint.
Hi Chandra, thank you for taking my questions. Just quickly, what is the growth of digital and non-digital, if you can just help us understand, of the overall growth of 3.7%? What will be the growth in digital and non-digital?
So I think our digital revenues last quarter made up 15.5% of the company. I think this quarter is close to 16%.
That kind of math we should apply for non-digital. Non-digital, if it is growing a little slow or flattish, Chandra, can you just help understand, with a lot of rebids which are coming up, are we seeing a very tiny amount or small amount of digital project in the rebids? Because I understand in the new deal wins, a significant portion would be digital. But what is the color in the rebids, if you can give? Is it still a lot more traditional and that is growing at a slower pace?
I think what are the 2 points I want to make? I'm sure you understand this, but I'll repeat it from my perspective. One is, digital plays across all service lines, right? So when we say digital, even existing systems, when they come for a rebid, sometimes it will just not be, this is what it is, and then you take it and then do the same thing. Most of it now come with, okay, this is what it is, what is the transformation story? For example, if you take infrastructure and application portfolio, what portion of it gets completely converted into cloud and SaaS or PaaS or whatever? So the deals will be a mix. So it won't be, I don't want to definitively say that there will be no deal which will be a non-traditional deal, a traditional deal will continue to be a traditional deal. I don't want to say that. But in general, you've got to see digital in that light, because eventually everything will become digital.
Fair enough. You started the year on a very strong note. You don't give guidance. Still, I'll ask you that, save for any uncertainty, is this year, from the deal wins you've had and starting on such a good note, will this fiscal be better than the last fiscal? From the visibility you have now.
You still have asked. I still will answer. I can't give guidance. I think it's a lot of factors, Varun. As you know, a lot of factors are playing out. I just want to wait, okay? Things look good, but I want to wait. I can't say.
Just one last question. You haven't mentioned any $100 million new deal client wins in this quarter. You've mentioned 50 and 20.
No, it's not deal wins, it's customer migration.
Sorry, customer client.
Customer migration, we have added 4 clients in 50 million.
Right.
100 million clients stay as same as last quarter.
Again, a question related with digital. With digital, since considering a lot of clients, a lot of deal wins, what you get is in the smaller. Do you believe, like, going forward, and not just for you, but for Indian IT as a overall, the number of addition of 100 million clients would perhaps slow down and we would see more of 20 million or 50 million plus, or would that be a wrong interpretation?
That would be the metric that you are talking about is a wrong interpretation, because the 100 million metric that we report is the annual revenues from a set of from clients. How many clients we have annual revenues of 100 million plus? That will continue, because we will serve those clients on multiple service lines, including digital. So that will be the wrong interpretation. But if your interpretation is that whether the deal sizes, will they shrink? Will you not see many deals, single deals which are 100 million, etc.? I can't answer that because some of the cloud deals are very large. Okay, so it will be a mixed bag.
Molishri, Business Standard.
Hi, I just wanted to understand how sustainable is the India growth. Do you think of 85% is quite a strong growth from India market? How sustainable do you see this is going forward for the year?
Frankly, most of our emerging markets business will be volatile. So if you ask me whether 8.5% will be sustainable, probably not for a long time, till it becomes sizable. But India business seems to be doing well at this point in time, but there will be volatility in emerging markets.
Thank you.
Siddharth from Bloomberg.
I just want to check. Diligent, you talked about how you expect the sort of growth to continue from here on. Do you expect Brexit to have any sort of impact on it? And if so, how do you plan to sort of take it forward from there?
See, I mean, for any of these questions, it's very dangerous to say no as an answer. But logically speaking, Brexit should not have any impact on Diligenta because it is kind of services it provides or for insurance policy holders within the UK. It's not cross-border and is a very necessary service. So it should not, logically speaking, not have an impact due to Brexit. But as I said, I've learned don't say no or never for any question.
Also, what is your forex hedging? Are you sort of changing your strategy to sort of counter the volatility at the moment?
We continue to remain on the 1 to 2 quarter forward. As you've seen, the market was hugely volatile and the depth also was not there. There's no point in bolting the door after the horses run. So we continue to remain with the rolling 2 quarter kind of a strategy.
Priya from CNBC.
I wanted to understand, in terms of the whole deal rebids, how is the market looking like in, FY17? How do you see that shaping up?
I think overall it looks good. The pipeline point of view, as I said before, it looks good because those rebids will happen. They will not, go away. So especially run the business type of deals, I think those will continue. And there will be some consolidation. There will be some customers will choose to consolidate and drive efficiency and simplicity. And will also try to transform for business agility, especially in the infrastructure and some of the applications into SaaS platforms. And those kind of deals continue. So how they choose to do it will vary from customer to customer.
Thank you very much, ladies and gentlemen.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.